4:02, so we'll get started. Thanks everyone for joining us. So we have about 28 people in the room now. I'm glad you made the time. I'm excited for today's presentation on credit, something that we all need to understand and affects our lives. This is the third of 3 presentations, workshops that we've been so lucky to have Rick Hasse provide for us this semester. This is part of a Title V grant from the federal government, also known as a legacy, that we're calling it our legacy grant. It's enabling us to do more programming around financial literacy, around career development, and we're just getting started. So this is the last one of the semester, but when we come back next academic year, we'll have even more for you. So make sure you stay tuned to our offerings when we come back in the fall. Rick, I'm going to introduce quickly here. Mr. Hasse has been working for over 35 years in the accounting and finance field. His career has included management in both profit and not-for-profit companies. He's taught undergraduate and graduate courses in finance, accounting, and statistics at the community college and collegiate level, a member of the faculty in the College of Business and Public Management at University of Verne since 1990. He's also taught at the Claremont Colleges, Ithaca College, and Tompkins Cortland Community College. Mr. Hasse currently writes a biweekly blog entitled Rink Rats, which is wonderful. Financial management experience includes mergers and acquisitions, corporate finance, and investment banking in industries including not-for-profit colleges, medical supplies, real estate development, and transportation services. He has an MBA in finance and accounting from ULV and a BA in economics and government from St. Lawrence University. He lives in Claremont and his passions are writing, golf, hockey, and investing. And I'm going to turn it over to Rick Hasse in a moment, but I just want to tell you, feel free to enter questions throughout in the chat and we'll get to them at the end. And we're being recorded, so anyone in the future can watch this session. Finally, Lexi just put a link in the chat. Please, please, please click on that link and record your attendance. It helps us a lot just to see who's interested and who's coming for the purposes of our grant. And with that, I'll turn it over to you. Thanks for being here.
Thank you, Sarah, and thank you, Lexi, for number 3 of our financial literacy workshops. And today we're probably tackling the most unpleasant subject, debt, credit. And that is something that a lot of us have to deal with throughout our lives. It's sometimes not very pleasant, but if done right and done correctly and done common sensely, it can be fine. And that's what we're going to talk today. And I have a lot to go over. I want to cover a lot of areas, but if I go a little bit too fast, just somebody raise a question in the chat and say, Mr. Hasse, shut up and slow down, but whatever. But I have a lot of material to cover and trying to cover all the different areas that a lot of our users of this workshop are interested in. I'm going to talk about some statistics. You always got to give statistics when you're talking about debt. I'm going to talk about, is all debt bad? And you'd be surprised. Most debt is a good thing. Most debt can be a good thing. What types of debt are there? Debt management strategies and getting organized to handle debt and credit. Tips on decreasing debt. Some of us have a lot of debt and we can manage it, but how do we really tackle it to reduce it? Some other options available to us. What not to do when it comes to credit and debt, and then some resources for us out there. And one of the best resources is our own organization and community here at the University of Verne. That's a wonderful source for people who need information about debt or credit management or any type of financial planning. We're already in the works of maybe perhaps continuing these workshops next academic year. And any ideas that any of you all have about possible workshops and specific workshops, please feel free to let Lexi and Sarah know so we can develop those programs. But here are the statistics, and they're so large you probably can't even fathom them. Roughly $14.5 trillion of consumer debt. About $800 billion of that is in credit card debt alone, just credit card debt. Over 500 million credit card accounts in America. 500 million credit card accounts. The biggest area of consumer debt besides mortgages is student loan debt. $1.5 trillion of student loan debt in America, and growing huge amounts every day. Roughly 45 million Americans have a student loan. I think the latest census count is 330 million Americans in the latest census of 2020. 45 million of that 330 million have student debt, with about 11% of that student debt delinquent, 90 days or older in payments, over 10% in delinquency. The average student loan payment in the country these days is about $300. Well, those are statistics, okay? You know, we see a lot of those every day. But one of the interesting things is how much debt is a part of our lives. From the time we're in college to the day we die, debt is always there. And it's increasing. And also it increases with the more money you make. The more money you make, your debt increases. Your desire for more things, your desire to pay back money goes higher. And debt increases as you develop your career, it increases. But as I was saying earlier, there's good and bad debt. And again, a lot of this is my own personal opinion. Take it for what it's worth, okay? But some of you might disagree with some of the things I might talk about credit and debt management. But generally speaking, bad debt is credit card debt. And the reason for that is it's too easy. It's easy. It's easy to use. It's easy to get. It's easy to screw up. Good debt is you're buying for the future or buying for value in your life. That's why I call mortgages. And some of you might disagree with this, but student loans I consider good debt because you're building a career with the education you're receiving. Vehicle loans I consider good debt because you need transportation, especially if any of you live here in Southern California. You need to drive. You need a car. If you have a family, you need to drive your children around. You need to go to a job. And most of our jobs, especially when we get back to our jobs, you require some distance, some driving. So there's good and bad debt. And I'm not saying that you shouldn't get a credit card. I'm just saying that the opportunities for getting into trouble increase with credit card debt. The types of debt, and we just talked about them. The main four types of debt out there are credit cards, mortgages, vehicle loans, and student loans. Now, all three of these four have collateral associated with them. What do I mean by that, collateral? It means that if you cannot pay, there's assets around that will pay those off. Credit card debt is non-collateralized. It's based on your FICO score, your earning power, your history of credit. And that's where that can be dangerous. You're limited by the mortgage you get, the car you can buy, and the student loan you can get by the people or the organizations or the government or your family or the assets that you have backing up those obligations. With credit card debt, it's a different situation. And that's why that can be dangerous. And we should all be aware of that. Speaking of credit card debt, my little rule of thumb is I have 5 expenses you should never charge on a credit card. If you have to charge these on a credit card, you're looking for trouble. But I have to admit, I've done 3 of these, okay? But at the same time, I know that I have to pay that balance off immediately. I don't let it ride because that's when you have interest costs. That's when your FICO score is affected by unpaid balances. Monthly rent or mortgage payments should not be paid with a credit card. They should be paid out of your paycheck. A large purchase that will wipe out your available credit. If you buy something, let's say you have a $1,000 credit line in your credit card and you buy something for $900. You immediately wipe out all the other available credit you have. So the history of using that card is limited, and you have a large balance to pay off rather quickly. shouldn't use a credit card to pay taxes. Now, I've done this many times before in my life too, so going against my rules of ethics there. But taxes are a lot of money, and if you spread those out over time, it influences your FICO score and it influences your interest payments. Medical bills should not be used with a credit card. And here's the biggest culprit: impulse buying, right? Geez, those shoes look nice. I think I'll get them. Yeah, boy, I've wanted a Ruth Chris Steakhouse steak dinner for so long now. I'm going to go out and get one. Impulse buying can be trouble. But these are general rules that you want to live by, because it reduces the pressure on your income and it reduces the pressure on your cash flow if you stay fairly close to these ideas. And naturally, all of us cannot avoid student debt. With colleges and universities being funded by the needs of more resources and cost rising, student loan debt is on the rise. This is through 2018. From 2008 to 2018, as you can see, it's a steady rise and it's still steadily rising. One of the things you should ask yourself, especially most of the people here are already in college or have a college degree, is should you fund graduate education? That's where it gets dangerous. The interest rate on grad school loans is roughly an average 2 percentage points higher. It's expensive, and the time period in college is faster. You have to pay it back quicker. It's dangerous. Not the admissions people are going to get mad at me about this for talking about this, but at the same time, you have to be aware of additional student debt on the horizon. It's key. How do you manage student debt? I'm getting this covered right away because I know a lot of people in our audience here are either have student loans or thinking about student loans or whatever. Don't ignore your student debt. Don't be in denial about it. Be aware of it. Understand it. Take stock in your loans. Keep track of where your loans are, when they are due, what's the interest rate, how are they being paid, what happens if you can't pay. Check for special programs. There's many loan forgiveness programs now. If you're a public service employee or you work for a not-for-profit organization and you have a student loan, there are special programs to reduce those payments and help you manage them better. You can contact University of Verne and ask about those programs. If you work for a for-profit company, there's programs available to refinance student debt or fix some of the problems. Refinancing, consolidations. Put together a payment plan that works for you, not only now, but where you think you'll be in 5 years, 7 years. Remember, paying off debt is looking into the future, not just today. Consider your personal financial situation, and if you can't, ask somebody to help you. If you're struggling, if you are in a career, there's nothing wrong with choosing a career that maybe will not pay you as much money as other careers. As long as you're happy, that's what counts. But if you do pick a career that's the payments are lower or your income is lower, find a loan that works for you. And if you have a student loan and you get a job and that monthly payment is too much, go and talk to the loan agency. Just don't ignore them. And avoid prioritizing student loans over everything else. Don't forget about credit card debt that you have. Don't forget about car loan debt. Don't forget about your rent payments. You have to prioritize and make sure you can take stock of all your obligations and manage them. We talked a little bit about this in our prior workshops in financial planning and budgeting. Don't ignore any of that. You need to be organized. And some of us are great organizers and some of us are not. What do you owe? Prioritize. How much can you pay now? Investigate other options. And I know sometimes that's embarrassing, but it's not embarrassing. I bet you everyone, including me, at some time or other, has had credit difficulties, has had issues with managing their money. Don't be in denial about that. That's being human. It happens. Get a credit report. Find your FICO score. Make sure you have all the documentations of all your obligations, your loans. Create a quick little piece of paper that lists all your obligations. Keep it simple, but how much do you owe? And you should do this every quarter or a couple times a year. Make sure you understand that. Don't hide from it. Don't put like your blanket over your head and say, oh, I don't have any loan problems. I don't have to worry about it. You do. Keep track of it on a worksheet. List your loans. List your obligations. No matter how small or how soon they have to be paid off, always know where you stand. And then prioritize your debts. What's the most important, or what's the one that has to be paid or has to be paid in that amount? How much do you pay a month? Put that as part of your budget or your planning. Set up a budget. Remember, we talked about this in our last workshop. What are your fixed expenses and your variable expenses? Your fixed expenses are your loans. You have to pay those. But at the same time, if you prioritize those, maybe you can work with some of those loan agencies. Keep records or try to pay down your debts. The main goal of borrowing money is to get an education, get a car, get a house, maybe get a nice vacation, but don't add more to that. Pay it off and then move on to your next choice of purchasing. Don't stack them all up and keep doing it. Make a schedule of repayments. What is your discretionary income? What income do you have disposable that is additional that you can pay? Maybe you might reduce your expenses. A lot of us are coming out of college with a loan payment on the horizon 6 months after we graduate. We know that's coming. We're looking for a job. We might have a job. We know how much money we're going to make. Maybe we got to stop spending money a little bit and get ready for those expenses or those loan payments on the horizon, or start planning for it. That's a very important aspect of debt and credit management. Credit can be a good thing or it can be a bad thing. As I said earlier, we use it and we misuse it. When you want to purchase something, do you have enough money cash to maybe make a down payment or pay for most of it now? Do you want to tap into a savings or reserve that you have to make the purchase instead of using credit? Does buying whatever you're thinking of buying fit into your budget, into your plan? Could I use credit in a better way? Can I wait to buy something? What are the opportunity costs? In other words, what am I losing out that's non-financial by not buying this? What are the dollar and psychological costs of using credit? And that's kind of a heavy-duty statement, but it's true. A lot of people freak out when they have debt. It affects them. It adds another stress to their lives. If you misuse credit, that's an additional stress in your life. And boy, I know people 55 and 60 years old who have all the money they want, and they're still burdened by debt and that stress of additional payments that they have to make. It's nice to buy a car, but 3 years down the line, you're still paying for that car, even after now you've beaten the hell out of it. Geez, I'm still paying for this car, and look at it, it's a wreck. But that's one of the things you have to understand about credit. You keep paying down the line because that gives you the ability to buy it at the beginning. You have to understand that. The advantage is you have the ability to purchase things that you need now. It's a cushion for financial emergencies. If you have to go on a trip to take care of a family member, If you have an opportunity to get a sale on something that you really wanted and it's now at a lower price. It's convenient. And also it provides a record of your expenses, credit. Those are the advantages. You consolidate and you make your payments in one monthly setup. You can travel, you get car rentals, you can shop online. That's dangerous. We'll talk about that later. You can get, which I think is ridiculous, but a lot of people yell at me when I say this, you can get credits on your credit card. Oh, I've used my credit card so much, I can get a free airline ticket. Well, that's great to get a free airline ticket, but you know how much money you had to pay to get that airline ticket? That's another thing a lot of people forget about. And also, having some credit is good for your financial stability. It tells the market that you are a good financial risk. All right? Have one credit card. Pay off your student loan. That creates stability in the eyes of the market. And the market is where you get your credit. That's important. And the disadvantages are numerous. And a lot of us know about that already. The temptation to overspend. It creates short-term happiness, but long-term financial problems. It ties up future income. That, remember I said about fixed expenses. You lose out in the future because you have to keep paying for something you're purchasing today and you don't have access to that cash flow. And you can't forget the cost of credit, interest. Now, rightly so, interest is pretty cheap now. You can get a car loan for 4%. You can get a mortgage if you have good credit for 3%. You can get a student loan for 4.5%, undergrad. You can get a graduate loan for 6%. When I was, here's the old phrase, and I'm sorry, go ahead and roll your eyes. When I was in college, student loans were 12%. When I was in college, car loans were 10%. We just thank Jimmy Carter for that. So that shows you what an old gangster I am. But money is pretty cheap these days. You can get some pretty cheap, but don't let that tempt you. All right? It's fine, but at the same time, do you really need to make that purchase? Is it necessary? I'm a big proponent on this. Last week we called it, last session we had what is called SMART financial planning. This week we have the 5 C's of credit: character, capacity, capital, collateral, conditions. I'm telling you how many times I woke up in the middle of the night: character, capacity, capital, collateral, conditions. Can you repay the loan? Will you repay the loan? You know, some people borrow money and they specifically say, I'm not paying that back. I'm not going to pay it back. And I don't want to get political, but our ex-president was one of those type of people. But we'll move along from that one. I'll get in trouble. What are your assets? What's your current net worth? If you don't pay, do you have collateral to pay off that loan? And are you in a secure job market? Or do you have secure income into the future? Some of the things you should be aware of: character, capacity, capital, collateral, and conditions. Remember that. The 5 C's of credit. You have all those things good, you're going to have a FICO score of 800. You mess up in a couple of those, it affects your financial reliability. Many a times, and I did this when I was younger, I'd borrow money, I'd take a second job. I created another set of income for me. If you're going to if you have a student loan, you got to start paying that back, and you want to keep living a lifestyle that you like, get a second job. Start a home business. Sell off some of your assets. You can do that easily now with the internet. So if you do acquire debt and your income doesn't change, maybe go out and find another source of income. And I know a lot of us do that already, have second jobs. I have some students in my classes that have 3 jobs. So sometimes that is doable, but realistic, sometimes it's tough. Consolidate debt. Organize your debt. Now, a lot of us probably aren't at this point, but a lot of us now with cheap interest rates are refinancing mortgages, going for those cheaper interest rates by refinancing. It's good for the banks because they get additional fees. Don't forget that now. If a bank is being really nice to you and giving you a credit card, and a bank's really being really nice to you and saying, hey, how would you like to get a refinance of your mortgage? They're not being nice to you because they're nice people. They're being nice to you because they're going to make more fees, more income. Don't forget that. They're not being nice. They're being business men and women. Sometimes if you prioritize your loans, you can consolidate your loans. You have an undergraduate student loan, you have a graduate student loan, maybe find a broker or a mortgage or a student loan lender that can consolidate those and make it a little bit easier on you. And always be honest with your creditors. Trust me, don't lie to somebody or some institution that you owe money to. Be honest. Admit that you're having troubles. Admit you are in over your head. Don't lie. If you're honest, they will help you. Trust me. Go back to student loans a little bit because I know that's a big topic with students that I have in my classes. 3 main types of student loans: subsidized student loans, unsubsidized student loans, and plus loans. There's a lot of links out there on the internet to find out about this. If you already have a loan and have no idea what's going on, I don't know what kind of loan I have, Mr. Hasse. I don't even know when I have to start paying it back. I don't even know what the interest rate is. Find out now. If you don't want to find out, call me, email me, and I'll help you find out. Find out what's going on that. A lot of times, again, I'm going to say something that's politically not correct. Sarah, I apologize. But a lot of times we let students into our organizations and we never explain to them what they're getting into as regards to student loans. If you're not getting that, find out immediately. You're entitled. You should know what type of student loan you have. Federal student loans, private student loans, who's the collateralized, who has to pay if you default? Can you consolidate them? What are the interest rates? What happens if you miss 1 payment? What happens if you miss 2 payments? Find out about it. Or if you have a member in your family who likes to keep track of things, have them find out for you. It's important. You can consolidate loans very easily these days. There are people out there to help you. You can pay as you earn repayment plan. They have a repayment plan with federal student direct loans where your income and your payment plan can be based on the income that you have currently. You can readjust those payment plans. You can ask questions about, hey, this is my earning power out of college. I know I owe $30,000. I know I owe $50,000. Here's what I can pay. Work with me on this. This is available to you to work out. It just takes you to make the effort to ask the questions, and it will help you. And trust me, it relieves a lot of stress out of your life if you can get this organized and understand it. But the most important thing is to understand your credit report today. So many of our banks, so many of our institutions give you free credit reports. Every month I can click on my Wells Fargo account online and get my latest FICO score. That's important because Experian, TransUnion, and Equifax, who keep track of all our credit, they give this information to everybody. Employers, not only banks and finance companies and credit card companies, there's many of the jobs here at the University of Laverne, you have to have a credit report to get the job. You want to rent an apartment, you got to have a credit report. You want to become a member of a public service job, law enforcement, government jobs, you got to have a credit report. That's important. Credit files are maintained by banks, by financial institutions, by those big three credit agencies, and they're driven by your social security number, your date of birth, your name, your address, your current work. Yes, they know you're working, trust me. Do you own or rent? They know that. Have you bounced a check? They know that. Make sure you don't forget these things when you go out and spend money and use money. The Fair Credit Reporting Act of 1971 requires that any of us can get information it's entitled to us about our credit history. If you have something in your credit report within these days of internet access and security issues, a lot of times you might have something in your credit report that has nothing to do with you. You need to find out about that. If something happens and you bounce a check, this stays on your credit report for 7 years. One bounced check, you make one mistake. If you file for bankruptcy, 10 years. So the management of your financial affairs will stay with you forever. But you have legal rights to make sure this data is accurate. One of the first things you should do when you get out of college, or one of the first things you do when you get a new job, or one of the first things you do when you get married or have a change of life, get an updated credit standing of yourself, of your partner. You turn 18, get a credit report. Well, I'm not on file. Okay. Get a job, you'll be on file pretty soon. When you turn 21, get a credit report. When you turn 30, 40, 50, 60, whatever, get a credit report. It changes and you should keep track of that. FICO, 350 to 850. It's a combination of payment history, amounts that you owe, the length of your credit history, how long you've been borrowing or using credit, any new credit that you've adapted that's come in new recently, and the types of credit you use: credit card, auto debt, mortgages, student loans, bank loans. Notice the two big ones: payment history and amounts owed. That's 65% of your FICO score. If you make your payments every month or when you need to, that's a big thing. If you reduce the amount you owe, that's a big thing. 65% of your FICO score. Roughly 66% of Americans have a good FICO score, which is roughly 670 to 739. But the difference between 670 and 800 is about 2 or 3 percentage points of interest on a loan. The better your credit history, the better your financial stability. Now, granted, when you're 21 years old, you don't have much financial history. Your FICO score is going to be fairly low. That's why you have to establish reliability, maybe get one credit card, maybe begin making your student loan payments. After 6 months of paying your student loan payment on time, your FICO score will go up 50 points. Trust me. Just for 6 months of paying on time because you're new to doing that, and the credit agency say, hey, this person can be trusted, low risk. That's important. But if you make mistakes into the future, which we all do, your credit score can be built back rather quickly by just reestablishing that consistency. I'm not going to go through this pretty quickly, but commercial banks, finance companies, credit unions, life insurance companies, savings and loans are all major providers of credit in our financial system. I strongly recommend credit unions, especially for our students and our students who are graduating. It's cheap. You're a member, you're an owner, they trust you more, you have less risk, you can get better deals. Stay away from finance companies. They're sharks. There's a lot of fine print. There's a lot of fees. Stay away. Let the Warren Buffetts of the world borrow from them. You guys don't. Too dangerous, too risky, too expensive. Mr. Hasse, do I have enough? What kind of debt can I get? How much money can I borrow? Well, there's general rules of credit. Now, again, these are general, and you should look at every one of your personal situations. Credit payments should not exceed 20% of your net income. If your take-home pay is $1,000 and you're paying $500 in debt payments, you are highly leveraged. Okay? The general rule of thumb is 20%. So your student loan, if you have a car loan, you have a credit card that you use regularly, you try to keep that in the 20 to 30% of your take-home pay. Remember when we talked about in financial planning, you want to have a cushion. You want to have an emergency fund. You want to have some cash stashed. Don't spend all your paycheck on paying off debt. That's trouble on the horizon. You might be able to do that for a couple of months, but that is trouble. So I like to use the 20% rule. The cost of credit is the finance charge, or the APR, the annual percentage rate you pay on a loan. Under the Truth in Lending Act, again, of 1971, creditors are required to tell you what you pay in interest. If they jerk you around on that, you have the ability to challenge that and take it to higher authorities to make sure that either that information is given to you, or they can penalize those people for not doing that. Make sure you know what your cost of credit is. Now, what happens if you have a complaint? What happens if you feel like you're being taken advantage of? First, try to solve the problem with your creditor. Be professional. Be aggressive, but be respectful. There's a lot of consumer protection laws and federal organizations and state organizations here in California to assist you if you have complaint, if you're not being treated fairly. The Chamber of Commerce, a lot of agencies. And if you don't know where to go, contact me. Contact the Human Resources Office here at the University of Verne. They'll help you. That's their job. So there's all these kind of acts, all these kind of laws to protect you. If your credit card is taken away from you, you have the right to know why it was taken away from you. And what are the procedures you have to do to get it back? If you have some information on your credit report that is inaccurate and not right, you have the right to change that and make sure that's taken care of. There's all kinds of consumer protection available to you. Here's the Consumer Financial Protection Bureau. If you have credit card complaints, that's the best link that I have found to get help if somebody's jerking you around. Now to manage debts. I got to hustle, I'm running out of time. Try paying off your credit card debt every month. Don't go out and go to Vegas and put $1,000 on your card. Just go out to dinner with your homeboys. You can manage that. But if you want to go to Vegas and charge a lot, then you have to assume the responsibility of you're going to have that go out over many months and you're going to have to pay interest. Do not miss a loan payment. If you're going to be late or you can't make it, call the creditor and say, hey, dudes, I'm having a tough time this month. Here's my situation. And they will work with you on it. Trust me. They will help you. You know you're in trouble when you start getting phone calls to your house saying, hey, dude, a recorded message saying, we need to talk to you. You're late on your payment. And here's a cardinal sin of managing when you know you have debt problems, is when you're using debt to pay off older debt. Oh, I have a second credit card. I'll take out a cash advance to pay off the other credit card. Dangerous, dangerous, dangerous. And you know you have debt problems when you go to get a credit card or you go to try to get that Target card and they say, I'm sorry, we can't give you one. You have bad credit. Ooh, I guess I better figure out what's going on here and I better do something about it. Make sure you understand what you have and your credit situation at all times. How is debt being collected? One of the biggest rip-off artists in the world are debt collection agencies, constantly bullying you and hassling you to pay off a debt. Go to the creditor, go to the consumer complaint agencies and work out debt payment. Don't go through these shyster finance organizations that are using bullying tactics to have you pay off debt. Doesn't do anybody any good, and it puts undue stress on yourself. There's a lot of financial counseling services to take advantage of this. If you don't know any financial consultants, use your employer, use your HR office. And if they can't help you, they'll refer you. That's their job. There's a lot of people out there to help you manage credit. But the best thing to do is manage it the best you can now by understanding it and working with it. Other counseling, as I just said, universities, local county extension agents, credit unions, if you're in the military, state and federal housing authorities, all have credit counseling services. If you're at your bank, most banks and credit unions have counseling services to help you that are free. They want to keep your business. They don't want to lose you. You do not want to declare bankruptcy. Chapter 7 bankruptcy is a straight bankruptcy where you have to sell off assets and pay off your debt, and the court, bankruptcy court, now runs your financial affairs. Chapter 13 bankruptcy, where wages are deducted to pay off your debt. You don't want to get there. You don't want to get there because it stays on your credit record for at least 10 years. It influences your ability to do anything in today's society. Don't get there. Seek help and understand what's going on. I know that's kind of a bummer way to end it, but sorry. As we've said all along in these financial workshops, the way to solve and deal with all this is prepare a budget, understand your financial affairs, understand your income, understand what your monthly expenses are. And the rest is up to you. Plan, invest, credit management, it's up to you. But there's a lot of resources, a lot of people who are willing to help you. I got it in.
All right.
Sorry, I had to go a little too fast, but any questions, please?
We have a few, and we've been lucky because we've had Sochi Martinez in the chat. Our executive director for budget and student financial services has been answering some questions as we go, but let me scroll back up. So the first one we have, what if you put your expenses onto your credit card and pay them at the end of the month?
Nothing wrong with that at all. That's good. That's nothing wrong with that. As long as you can manage that and pay it every month, it's a good way of keeping track of your expenses. Nothing wrong with that at all.
Is it better to make one big payment at the end of the month on your credit card, or should you be making multiple small payments throughout the month?
Well, I think as long as you make it, if pay it off within the 30-day time period, that's not a problem or a way of doing it. But one of the things is it's probably driven by your cash flow when you have income coming in. So if you have income, like I did for many years, if you have income coming in twice a month, maybe one paycheck went to one credit card or one type of debt, like one went to rent, one went to my student loan, and then the next payment or next income or paycheck goes to paying off my credit card balance. But I also know when I use my credit card, that's how much money I can have to spend, is what my paycheck is in that second paycheck. So I better not be putting too much on that credit card that exceeds that.
Yeah. Should you pay for student loans with a credit card or straight from check?
Straight from check.
Straightforward. Let's see here. Okay. I think Alex's question got answered in terms of where do I find refinancing options for my student loans. Sochi put some resources there in the chat. Mary also asked, when paying back student loans, is it better to apply payments as refunds or as payments? Is it true that applying payments as refunds can help lower the total cost of your loan in the long run? And I believe, I just lost the chat here. I think Zochi said apply as refunds. Eric asks, when you finish paying a credit card and don't use it anymore, will it affect your credit score?
It will after a while, Eric. It's better to, once you pay off, like for example, I have two credit cards. One credit card I use for traveling or whatever I'm using, and I pay off on a monthly basis. Then I have a credit card for special occasions. If I have to do a major purchase or I have to put something, an emergency use of a credit card, I don't use that very often. And I have found over time, if you don't use it like 3 to 6 months, that eventually will affect your credit score, because they're saying, well, you have credit and you're not using it, you're going to get penalized for that, which seems kind of ridiculous, but it's true. So if you do have that situation, try to use it every now and then, not very often, but just to keep that card active, and that won't set off those bells and whistles with the credit agencies that will maybe deduct some points. Not many, they usually maybe take 5, 10, 15 points away, but that does make a difference sometimes in getting better credit, better loans and uses of credit.
We have a couple questions about closing credit cards. So the first is closing a credit card bad for your FICO score?
No, no. And don't, if anyone tells you that, that's a bunch of BS. Don't, if you don't use it, you don't want to use it, get rid of it. It's not going to affect your score. Matter of fact, it'll probably down the road, very short term, it'll make your credit score better because you're managing your existing credit better.
That's great. If you close a credit card, should you close the newer one or an older one? Is there a difference?
Not much of a difference, only if the credit line is different. If you have one credit card with a credit line of $2,000, and then you have another credit card with a credit line of $5,000, if you shut down that credit line of $5,000, that's going to send off some bells and whistles to the credit agency, wondering, oh, they think your credit or your income situation has changed or something's happened. That's going to freak them out a little bit on the short term. So I would usually recommend try to get rid of the credit card that has the lower balance first, and then keep the one with the greater balance. It's probably a little bit better.
Okay.
But it depends on your history and all that sort of thing. So.
Mary asks, what's your opinion on taking out a student loan from your bank?
Well, two things. First of all, not a bad idea because they know you, and you might get some decent rates and decent terms. But at the same time, make sure you understand what the bank is offering. How is the bank? What happens if you can't pay? What's the default situation? Is it collateralized? Is it non-collateralized? What is your standing with the bank? Make sure you understand all the fine print as you negotiate that. But usually it's a better idea to negotiate or get a loan through your bank because they know you or your family better. You probably can get a better deal, but understand the fine print. Bankers are corporations and they're out to make money. They charge a lot of fees. They charge a lot of cost if you miss a payment that really goes after you. So you got to make sure you're aware of that before you start getting into that.
Yeah, the other thing I always worry about with that is, let's say, like you were saying at the beginning of your presentation, you're doing that calculus. Well, what kind of job do I want to have? What kind of repayment program will I be eligible for? I think, for instance, if you work in higher ed, you can apply for some of that public service forgiveness, right? But if you have a loan from your bank, that's not going to happen.
That's not going to happen.
You have to take that into account. So it's important.
Exactly right.
So I believe Sochi answered this, but Nyla asked, once I obtain my bachelor's, I'll need to start making payments on my student loans. Does that change if I begin working on my teaching credential and master's?
Right. That once you go to graduate school or have some type of arrangement as far as it's job related, you can get a deferral on the payment of that loan over time until that is over with. Yes.
This has been great. We've been rapid firing questions, so please feel free to put more in the chat because we have a few minutes left here. I wrote down a few just while we're waiting. Does an inquiry into your credit impact your credit score? So in other words,
yeah. Okay. On the short term, it adds a little blimp. And that's one of the good things about if you go with, it's available now with technology and the internet. If you click on, like I have Wells Fargo, I click on Wells Fargo every month and it gives me my credit report, but it also tells me who inquired about my credit and what happened and why the score adjusted either up or down. And it'll show you that if all of a sudden you start applying for a car loan or you apply for a student loan or you apply for another credit card, you'll see a blimp on your credit score, maybe for 5 points, 10 points, waiting to see what happened with that credit and then they have to check whether your income or what you're doing meets the additional credit that you're seeking. So it's just a temporary thing. And once that's over with, it'll reestablish itself once they know what you're doing, what you got yourself into, and so on. But it does affect it momentarily, yes.
Nyla asked, will there be a workshop on investing? Nyla, we had a workshop on sort of stock market 101. Lexi, I'm wondering if you can put the YouTube link in the chat so Nyla can see that. I'm sure we'll do another one next academic year as well, but Nyla, Mr. Hasse did do one earlier in the semester, so you can feel free to watch that, and Lexi will link that for you. Mary asks, if Biden does cancel student loans, how will that benefit students attending private schools?
Well, Mary, you a Republican or a Democrat? I have to ask you. No, I'm teasing. How that affect you? Well, if he does decide to cancel student loans, and that's a big if, a very big if, it will influence. If you go to a private university, you will be able to maybe negotiate and get some benefits out of that. Again, the fine tuning of this law and the fine tuning of what Senator Elizabeth Warren and Senator Bernie Sanders want to do is everybody will be qualified to defer or to cancel student loans. But again, in today's political conditions, I don't think that's going to happen. There's going to be a lot of fine tuning on that. There might be certain income levels to be able to defer a student loan. If you make less than a certain amount of money a year from your tax return, you'll be able to qualify for a student loan deferment or a reduction in your principal payments or your principal amount. There's a lot of that has to get to be decided, Mary. So I would just say stay tuned on that and keep appraised, and also contact your local congressman and congresswoman and senator and explain to them your situation. There's nothing wrong with sending emails to these people and let them know how these laws can affect you.
Absolutely. That's a really great point, that this is something, if you feel passionate about it, which I definitely do, it's good to make your voice heard. I think we have time for a couple more. So I have another one since the chat we've run through it. What happens if someone steals your identity and messes with your credit?
Well, first of all, that's going to be a stressful psychological change and problem, but at the same time, it's going to be a big hassle. And one thing you should do with a lot of credit card agencies and the credit card companies and banks is put procedures in advance should something like that happen. I'm sure a lot of you have your cell phone. On my cell phone, every now and then, my Wells Fargo bank sends me a text saying, "Hey, Rick, did you just buy $100 at such and such place?" And I say back, "Yes, I did." The reason they did that is because that was an unusual purchase that they're not used to seeing. And with logarithms and algorithms right now, they have programs to watch and monitor yourself. And if they see something out of the ordinary, you can immediately say, "No, that wasn't mine." And immediately they will put a stop to that credit and that engagement. Now, a lot of us don't have that luxury. And also this costs a little money. It costs me $30 a month to do that, to have that as part of my bank services. A lot of us can't afford to do that. So what you have to do is take it upon yourself to monitor and maintain the security of your own personal network. Make sure you're not messing around in open area internet sites. Make sure you know exactly where your credit cards are. You have passwords, you know the numbers, you keep a separate record of all your bank and account numbers. You monitor your credit report monthly or quarterly. That's where you'll see some problems. But if you do all that and you have an arrangement where you can be warned in advance, that's a big help, especially these days. But if you don't have that ability, just stay on top of it and keep your financial affairs simple. Don't have 7 credit cards. Don't have all this stuff running around. Don't have multiple internet sites where you have your bank account information and you buy things online. Just create 1 or 2 and then keep track of that. It makes it a lot simple and harder to hack into.
That's good advice. I'm going to sneak our last question in here from Eric Barajas while we have 1 minute. He says, when opening a credit card with no interest, for example, 12 months, and you're still making payments past 12 months, is it a good idea to open another credit card to transfer the owed amount from the old card to a new card to not pay the high interest from the old card?
Well, again, remember, these banking and these financial institutions are capitalists. You think you're getting a deal, but you're not. Okay, that's what the first thing you should know. Now, in regards to your own personal situation, in that regard, my opinion is stay away from those deals. Just manage your existing credit. Don't get any new credit cards and move the balances and do all that. That's just their way of getting more money. Remember, when you open up a new account, there's probably an annual fee involved. When you open up a new account, even though they say there's no interest, by just using the card, they're making money. So again, it's not really to your benefit. It's more to the benefit of the financial institution. You're not really coming out ahead.
Thank you so much. And we're right at time with that. If you have not already, please do mark your attendance in the link that Lexi just put in the chat. We so appreciate you being here. And please join me in just thanking Mr. Hasse, not only for the presentation tonight, but your work all semester. He'll definitely be back. I'm just going to promise this for you. He'll definitely be back next academic year, and we'll do even more. So until then, have a great rest of your semester and hope to see you soon.
Bye, everybody. Take care. Thanks, Al. Thanks, Bo. Good to see you.